Hello, and welcome to Pro Trader Strategies Market Commentary for Tuesday, January the 26th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios. Therefore, what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. First off, sorry about the hiatus, last minute emergency in the family, so we had to take off, and then I also had some computer issues. So some of you may have noticed that there was a lot of lag going on in some of my charts, so I've got that fixed. I had to uninstall Windows 10 and move that back to Windows 7. So that was a big issue with my computer trading and filming these. So moving on though, so I've done a lot while I was on hiatus and not able to comment on these in the daily market commentary. So a couple of things that I've covered was like my Best Buy, my ADM, Nvidia, Whole Foods, Twitter, GoPro, Kraft, and a few others. So there's some trades that I've covered over that last week that I wasn't able to let everybody know about other than on Twitter. But anyway, going forward, I'm just going to move forward, cover the remaining ones that I have and talk about those and the ones that I add on going forward. All right, so moving on. As you can see here, NASDAQ right now is actually lagging despite the fact that it is up 30 ticks right now above this value area low. And as you can see here, the E-mini S&P is up about 20. And that's why I'm saying in relation to the E-mini S&Ps versus the E-mini NASDAQ, usually the NASDAQ is well outpacing the E-mini S&Ps lately on the upside and then was a lagger on the downside. So now that we've kind of bounced and gone back up, it seems that the NASDAQ is lagging a bit, which isn't really surprising knowing that the tech sector is going to lag on this next rebound. One thing that I wanted to note that this seems like, I've talked about this support area for quite a while. And when we blasted below that the other day and was down like 550 points in the Dow, and then we kind of rallied back and almost, gained it more than 2/3 of it back. That made it seem like there was a bit of capitulation going on there. And anytime there's capitulation in the market, that usually signals a bottom. So now that we've bounced up, come back down and retested this support area and rebounded yet again, it's starting to look like it's becoming a little bit more orderly than what we saw several days ago on like the 20th. So this could indicate that we're going to try and rebound and come up here and test this little value area here. So if we look onto the chart here, as you can see, we are pushing up against this value area. It's going to want to test that, it looks like. The only thing that's out there is that this did push down overnight and created a low that the intraday market hasn't traded. It just seems a little too strong to want to go and do that today. In the past, it's wanted to print those, but I don't know if that's going to happen today or not. All right, so moving on to earnings trades. This is earnings season, so I haven't been putting on a lot of new trades, just been taking off some of the other ones and giving myself the margin to be able to trade some of these different earnings trades. And like I said, we got Apple today after the close. So Apple, I'm pretty bearish on Apple yet. So I just don't think that they've come out with very many new products. I don't think that the products that they've come out with that are new are really innovative. So I think that Apple has seen its day, at least for the near term. So with Apple, I'm looking to short this. So I'm going to be looking to sell some calls, maybe like the 109 calls or something like that. So like I said, I do that towards the second half of the day, and that's what I'm going to be looking at doing. We also have like Johnson & Johnson, Facebook's coming out tomorrow, the Las Vegas Sands, Merck, and eBay. So those are going to be several that I'm going to be looking at in the next couple of days. All right, and then onto the ES, like I spoke about, it's going to want to push higher. A couple of things with the market here. I wanted to talk about a couple of things that I did take off today was SPY. Now you guys know I have on an iron condor in there, and I just took off the call spread of that iron condor. An iron condor is a put spread with a call spread, and originally I had on the February 179, 184 put spread, and combined that with the 209, 214 call spread. So I covered the 209, 214 call spread for 2 cents, and I'm leaving on the 179, 184 put spread because the call spread's not really helping me. I looked at rolling that down, but I am bullish the overall market right now in the short term anyway, and think we're going to see a bit of a rebound. So all that those call spreads are going to do is really hurt me. The other thing that I did was in DIA. I had rolled down this call spread in DIA on the sell-off when we first started selling off, and I had on the I think it was a 175, 176 call spread. Rolled that down to the 170, 172 call spread, and I collected 77 cents for that call spread and covered it back this morning for 15 cents. So out of those short overall plays for the market, those were the ones that I was trying to add short deltas to my overall portfolio to take advantage of any downside move, and I've taken those off because, like I said, my thought process has changed. I think that we might see a bit of a rebound, and I don't want to be hurt holding those short deltas in these ETFs. All right, that's all I got for you guys today. Friday's webinar is going to be on synthetic short stocks, so that's a really great one because it increases your return on capital. You can short stock, but that's a real margin hog because you're selling the outright stock and you have to put up the money for the entire stock position. Whereas if you are doing a synthetic short stock position, you have a lot less, maybe a tenth of that margin taken out of your account. So check that one out. Should be a really good one. And that's all I got for you today, other than if you can't take that, take it easy.